Hello, everybody. Welcome back to our weekly edition. I am here accompanied by Mr. Celestin. And again, my name is Matthew Daniel. Thank you for joining us on the Funder One UBETS channel. We have a special guest and a great friend of mine, Mr. Jason Coles. Why don't you say hello to everybody, Jason?
Hey everyone, thanks for having me on. I've seen a few of these already. They're pretty interesting. So,
Yeah.
it's going to be a pleasure. Going to be a good video, I hope.
Yeah, it's always a good chat with you, Jason. So, and Sed, thank you for always joining with us. So, I know who you are. Sed knows who you are, Jason. What about who you are, your background, and what you're up to today?
Yeah, sure. Uh, look, I'm young, obviously, don't have a huge background. Canadian, we'll start with that. But went to school for accounting. Turned out I hated taxes, but not so much hated paying them. I just hated doing them. So moved out of taxes pretty quick. Being young, it was nice. Crypto was kind of right there. So made a stretch. I got into Bitcoin pretty early. Um, you know, did some very simple trading with a bunch of friends, at the time where you could literally throw something at a wall and it would give you back 200 times your money. That was kind of what crypto was back then. And so got into it. We saw the first couple ICOs pop off, and me and a few friends did our own, raised about $7.5 million, with 12,000 investors, pretty crazy during the hype. Met you along the way. Initially there was no marketing companies or advisors, so we would get messaged, hey, can you help us with this? Can you help us with that? And so kind of got into the space, doing crowdfunding, even did consulting for crypto wave, obviously met you guys. And Bitcoin went from 20K down to 3. The crowd left pretty quick. And I actually got message from a publicly traded company, and they said, hey, like, we see what you're doing in crypto, do you want to try and do it in equity? And now kind of brought a lot of the marketing expertise that I learned in the crypto space into equity, and been doing a lot of things there.
Yeah, sure. It's been definitely a voyage, hasn't it? I mean, the crypto market, changes with the season, as they used to say, and now I think it changes with any reason, and that's what makes it so exciting, and the opportunities. The beauty of crypto, as we all know, is there's always new opportunities, right? And it's up to the people that are forego seeing that know how to capitalize on these opportunities, and that's what really makes it exciting. Traditional markets, they move at the pace of a snail. So it takes a lot to move a whole new market of interest. And crypto, it's easy to push a new product or a new type of
You go away for a week for holiday, and it's like you missed 3 years in the crypto space. And it's so true when people say that. Obviously the market's 24/7. You can always trade. And yeah, it's wild. I lived through two of the kind of downturns. Like, the good times in crypto are really, really good. The bad times are obviously pretty slow. In some cases, I know you've done extremely well, even in the, I guess, harsher times, because it moves a lot of the garbage people away and leaves the better ones left standing. But that's a big thing about crypto. The highs are high, and Bitcoin just hit 13K over the weekend, so it's looking pretty good for the end of the year. But yeah.
Yeah, well, let's get into some of these questions. A lot of our members, our followers, we just hit 90,000 followers, guys. So thank you very much for following us. Continue to keep following us. We made a pack as a company and said we'll continue to put out good content for you guys so that you can learn about the marketplace and learn more about our coin and all the things that we're doing. Again, we want to be fully transparent with you guys, let you know everything that we're doing. We want to bring in new experts and new ideas and say what they're doing, show what they're doing. And that's important for us as a company as we grow. So, one thing that a lot of people ask, Jason, I get it asked probably once a day is, Matthew, Jason said, what is the difference between a coin and a stock? It seems to be, I don't quite get it. So in simple terms, how would you explain the difference between a coin and a stock?
Yeah, I guess before it gets super easy, I'll say, like, there's coins, there's tokens. in theory, you've got a security token, you've got a utility token. A security token versus a stock are very similar. You're investing into a company. Typically, they have some form of ownership. And that's kind of how it works. A utility coin is like you're buying a piece of what's going to be used on the platform. For example, imagine Chuck E. Cheese. They had only 1 million tokens ever made, and you were able to buy 100 of them. So that's a little bit of the difference. Obviously, one is just you're investing in hopes that the company builds value, for their shareholders, just like a stock. And then the utility token is you're hoping that users come to the platform, and that way what you hold grows in value because more people need what you have.
Yeah, no, I think that sums it up pretty clearly. Said, did you want to add anything, or how do you see the difference between a coin and a stock in your mind?
Well, in my mind, I don't see a big difference, uh, although there's a difference because the stock, you have to deal with the stock market or the regular stock market versus on cryptocurrency, we're only dealing with exchanges and blockchain. That's the only difference. As far as the coin or the token, you see, it just depends on what back it up, which means what project or which project that you have, because that makes the big difference. Because like our project, based on what we do, we actually tokenize properties and we create liquidity and eliminate debt, you see, which is a little bit different than a stock. When you purchase a stock, that's all you have. You just have to wait to sell it later. Versus our project as a utility token that we have, right? We do one thing and one thing only, and we're very specific in what we do. So that's kind of what shows the difference between the two. But
Yeah.
other than that, I don't really see it, but it's just that you make money either way, you see?
Honestly, in a
That's
lot of ways, and that was an amazing answer, by the way. Said I'm impressed actually. So very, very impressed. You crushed that. But on the other side, the only real difference I would say right now is one is kind of the futuristic, one is stuck in the past of the very boring financial world of stocks and how dated they are. Like you still get certificates that look like a fancy piece of wallpaper, and you do this, do that. Like the banking system takes so long. Meanwhile, crypto, in theory, right? Let's say it was a digital stock. You could sell your stock to someone in Hong Kong, have money for it in 10 seconds, right? That's kind of what I see is kind of the world's moving in that digital climate, globalization. And, hopefully you're starting to see kind of tokenized, companies being able to be traded on a global liquidity market.
Yeah, I think, so back in, just to give you guys a little bit of light, back in 2012, there were new rules and regulations for some of us, right? They were called the Jobs Act or Title II, which President Obama passed, right? So that was a big move in traditional markets. That allowed people to have a public offering and be able to go direct to investors, to publicly solicit direct to investors. This was before 2012. It was illegal for you to tell your neighbor that you had an offering.
exactly.
You couldn't raise money from anybody unless legally you knew them. Technically, they were your friend or family, actually, for 27 days is the exact rule, right? These rules were ridiculous, right? That's where there was a point in time where people said the rich got richer. That's because you could only, when you're raising money, you could only go to rich people. You could only go to investment bankers, a bank, a broker dealer, a venture capitalists, or angel investors. They all have to be registered under some Rolodex that somebody was holding captive. Well, Obama lifted that curtain on the market and allowed us to go direct to the investors if you're raising capital. This was a huge shift in the market. Nothing's been done like this in over 100 years of public markets. And that sparked a lot of idea and a lot of strategies that was adopted even by over on the crypto side. Again, 2012, crypto started booming in 2012. So that was the first step on the US of public fundraising that I think is going to continue to pivot in that direction. Again, being able to raise money worldwide is the future that we're moving to. And all these new regulations are getting broken down and are being reformed and are being more open where we can actually start doing that. And that's really exciting for both crypto, obviously, is doing it, and traditional markets. So I see a lot of overlapping starting to happen here in the next 5 years, so that's pretty exciting.
Well, everybody try to stay away from the centralized system, because the centralized system is controlled by a certain group, you see, whereas the crypto platform is decentralized, and that also makes a big difference between the two.
Yeah,
It's a big difference, and look, I've been going to crypto conferences since when there would be 100 people and people would show up with shirts that said "fuck the banks." That changed to people now going, they just wear Bitcoin shirts. But that being said, some people like the centralized structure that you're about to see countries offer digital dollars. You've seen the US, even Canada, coming forward and saying they're looking at it and they can see a future with a digital dollar. And it's good for some reasons being centralized, because typically it makes getting insured a lot easier. And I don't know if you've ever gone to your parents. I mean, my mom can barely use a printer. Trying to get her to use crypto, Bitcoin or something like that, is impossible. And they always the first question they ask is, oh, but what if I get hacked? How do I get my money back? Because right now, their credit cards get stolen. You just call Visa and they go, yep, here's your money back, see you later. So obviously there's still some things that need to be figured out. The insurance part of it, I think, is the big part, which typically requires a central authority.
Sure. Yeah. And I think we're starting to see a little bit of that transitioning in crypto. Me and you both, Jason, know that Binance is the first to provide a type of FDIC, not exactly FDIC insurance for their exchange.
You froze there, Majesty.
Oh, can you hear me now?
Yeah. You
Yeah,
said
no.
me and you both know, and then you cut out.
Yeah, I was just gonna just share that, the crypto is trying to move over into that type of insurance model, right? I mean, Binance.com is being the first to provide an insurance for their exchange users. There was a hack that happened on their account. I can't remember if it was 3 or 10 million, but it was a lot. And they completely refunded that user, so we're moving to a place where people can feel more comfortable and confident. A lot of these smaller exchanges are getting weeded out as well. And there are some of the bigger juggernauts or monopolies in the space are providing much better security purposes for coin holders. And, over time, like anything, everything takes time. But where there's a little bit of kind of the Wild West is where opportunity is, right? I mean, that's where people make the money, right? So the longer you wait, probably going to be less opportunity, right? So when you're in the Wild West, that's where people make the money, right? When the bubble's going. So exciting times for sure, but you're absolutely right on that. Which brings me to another question, is, a lot of people kind of stumble over, security or utility. Jason, how do you see, again, let's clarify, just highlight the difference between a security and a utility, so we can kind of, make some highlight bullet points for these people.
Yeah. So a security, again, very similar to if you're buying shares in a company. It's the easiest way to look at it. If you own ownership in the company, you're getting some form of dividend, that's a security. The utility coin is typically something where, think of it as you're either prepaying for services. So think, if you're buying air miles from someone. In theory, you're just prepaying for future services you're going to use. So that's how you look at that. Same thing, like you're buying a token that can only be used on one platform. There can be a price attached to it, at least in many jurisdictions. That's the rule. As long as it can only be used within the platform that they set out. And of course, if other people build on it, and you have Ethereum where all these other people are building apps where Ethereum can be used, but as long as it only operates within your kind of closed environment at the beginning, during your offering, at least, you're kind of utility. I know that kind of went all over the place. So one you own ownership in the company. Typically, it's either you have a percentage or you're getting a dividend, and the other one is kind of everything else.
Yeah, it's almost the coin has a use to it, right? There's a use for the coin, right? Entering a platform, putting down a deposit, purchasing a product with the coin. There's a lot of different use cases for it. So, which brings us to our for the new people said that are following us. So what type of coin does UBETS have, and how does that work for our new followers?
Well, we have the utility coin. The reason we have the utility coin, because just like Jason just mentioned here, for what we do is best. Because what we do, again, we tokenize properties and to create liquidity. Now, there's a thing that we have when we go to seminars with all our people. We usually tell them that they invest in themselves. Why we say that? Because our platform, what we do, let's say you want to purchase a house, you come with purchase UBETS to qualify. You have UBETS in your wallet, and once we close the transaction for you, your UBET stays in your wallet. It doesn't go anywhere. So after that, you can use it for based on where we're going right now. We have some of the major back stores that we're going to be partnering with, so they can use those coins and purchase different things, or they can actually go to the exchanges. Like we have Probit, we have P2P, and we also have Binance DEX that they can go and sell it and do whatever else they want to do. But the bottom line is they join UBETS or FUNDER 1 is because they have a project that they need funding for. And they come in as a member and they can purchase UBETS so they can qualify, since we're doing a peer-to-peer transaction. So they need to qualify. The only way to qualify is to have cryptocurrency in your wallet, which is roughly 10% of whatever the project is. And once you have that, you qualify. So that's how we use our platform when it comes to UBETS. And also, again, we have a utility token. We don't have security. Now, will we be interested in going into the next step? That's yet we're working on that. And of course, we are open to whatever opportunities the system give us to move forward.
Yeah, that was going to bring me to my next question. Does UBETS ever plan to do a security coin in the future? And I think I got the answer. Yeah,
for sure.
Yeah.
This is a for sure thing.
Yeah, no, that's good to hear, right? It's good to, we move where the market moves. If there's opportunity for our members and for the business to build more additional value or valuation to the business, then that's the direction we're going to move. So
I want to touch on just like what you're saying, because I know I get questions all the time. Like, for some reason, people are terrified of security tokens.
Yeah.
I don't really understand why. As long as the company is doing something real, there's no issue to have a security token. And like you said, you can have a utility, you can have a security, you can have 5 utility tokens. There's some companies that have a ton. And it's worth mentioning to people that security tokens are still, as much as people have been talking about them for a few years, they're still very new in the crypto world, and they're growing in popularity slowly, day by day. And again, you guys can add on a security token whenever you guys kind of see fit, and when you want to engage people in a new way, right? So I just want to throw that out there. I think a lot of people sometimes get the wrong image of, oh no, there's a security token, or there might be, or whatever. And of course, as long as the company's real and doing something, then there really is no issue.
yeah, and especially in the US, right? In 2019, the SEC was playing around, sending out a bunch of PR, is a utility a security, is a security utility? There was a lot of uncertainty until the chairman of the SEC came out and said that utility is not a security, right?
Exactly.
that was music to everybody's ears in the U.S. and put a lot of institutions, sophisticated investors, and traditional coin holders in the market at ease. So that definitely started pushing utility coins here again in the States. So Jason, I wanted to ask a little bit more about your company and what you guys offer at North Equities. Tell us a little bit about your target clients and what exactly you do for them and what they can expect.
Yeah, sure. No, and I appreciate being able to, I guess, plug it a little bit here. No, so North Equities, obviously, again, younger guys. Kind of the world of, we touched on kind of the equity markets, extremely dated. How people interact with investors is extremely dated. Press releases are boring, all that kind of stuff. And we kind of bring the new, 20-year-old version of, kind of social media and investor relations kind of together. We bring again, social media, videos, and everything in between, a lot of outreach on, whether it's Reddit, Stockhouse, you name it. We bring a lot of these avenues together and work with publicly traded companies to engage or find new investors. It's been extremely beneficial for us, the past couple months, even this year, with everything going online, being pushed digitally. A lot of our stuff has seen great success. So though COVID, it sucks, it's been terrible, obviously extremely boring and all the other issues that it's caused. But for us, it's been amazing from a business standpoint, pushing our envelope. But yeah, we've got, 40 clients and working with publicly traded companies.
And to be specific, what size company, what's public markets are you playing with? Who can reach out to you and who kind of is an ideal, cap, for say that these type of clients you're looking for and you can help.
Yeah. Well, right now, the only outreach we've done is North American. That being said, we've got clients that trade in Canada and the US, they trade in Germany. Social media's outreach, you can target anyone from anywhere. So that's been a big power. But typically right now we're looking around a 20 to $30 million market cap is ideal. That being said, we've got clients as low as $3 million, clients as high as $300 million. So kind of everything in between. We've got companies listed on the NASDAQ, of course, listed on the CSE, TSX, OTC, you name it. So just to touch on a bunch of things, but there's really not staying away from anyone, not, specifically targeting a certain industry or anything. Right now, we've been having success kind of across all industries.
Yeah, no, that sounds exciting.
Great.
That brings me to another question for you, Seth, since we're talking about public markets. Do you ever see Funder One potentially being on a, TSX, NASDAQ, a Lithuanian exchange if they have one? Do you ever see us being on a publicly traded stock exchange?
In fact, that's our next step.
Which one? All three?
All of them, all of the above. That's our next step to go up, because you see, you have to remember one thing about us. What do we do? We are in a multi-trillion-dollar business. We can do what we do all over the world. There's no limitation. There is no place that we cannot go. It's all a matter of having the funding to fund those projects. Because based on our structure, we can go anywhere. So which means going to the stock or stock market or any other exchanges, it's an open field for us. Once we get going, I truly believe our investors will actually push us into those markets, and we will be ready and able to do that.
Yeah. Yeah, I think again, always leaving our options open, and if that's the direction that our partners and members of the business that we're board with, we're going to go again to benefit everybody or to move us into new markets. Again, right now we're in the U.S., but our goal and our platform is set up to be completely worldwide. Right. So whatever we need to do to get those full outreach is what we're going to do. So that's what's really exciting about, what Funder One is offering. So, I did want to ask Jason, I didn't get to ask you earlier, but, you've done a lot of projects in crypto with real estate. You've seen a lot of different models. How come we've seen a lot of failure in real estate and versus what we're doing? It just seems to be a much better model.
Yeah, well, typically the real estate coins you see is they want to buy an apartment building and oh, let's raise $40 million and everyone gets a small piece of this apartment building, which at the end of the day, it sounds interesting because people would invest because instead of having to buy a house and then lease it, it's handled, and also you can buy 0.1% of a house, and you still get the increase in real estate. The issue that a lot of companies ran into is there just wasn't enough money to go around. So you had kind of poor management, but also these coins that were backed by real estate in many cases still felt a lot of the volatility of crypto. And a lot of the times, if you're investing in crypto, especially in like 2017, you weren't trying to just make 8% a year, or even, and don't get me wrong, 8% is great, but making 8% a year in crypto is not great, at least back in 2017. So you ran into a lot of issues there, and then price fluctuation, of course. And the price of these coins can only get so high. If you've got an apartment building that's backing a coin, the apartment building is worth 20 mil. Well, it doesn't make sense for the coin's market cap to be 100 mil. So you just kind of found a limit there. And obviously there was only so much those companies could grow. Whereas with, FUNDER and UBETS, you guys talk about a global model, okay, we want to, whatever, buy 5 houses or help people buy five houses. Obviously you can scale that up to 500 houses, 5,000 houses, 500,000 houses. And that's where you're getting, scaling like crazy, and the massive opportunities, obviously, in the real estate market, which Seth already touched on. Just speaking from a Canadian, half of our GDP is basically, real estate, construction, so anything like that, look, that's a massive industry, let alone, everywhere else in the world. So definitely a good opportunity here. And, hopefully you guys have some good timing with Bitcoin on its little run.
Yeah, no, I mean,
Wow.
you said, well, I'll steal this from you, said. You'll always say it's one thing that everybody needs, right? What's one thing everybody needs is a home. Everybody needs a home to live in.
Had to stay somewhere. Now, one of the things I can touch on based on what Jason just said here, all those platforms that try to do real estate, they missed one thing and one thing only. They try to do it their own way. It doesn't work like this when it comes to real estate. You cannot reinvent the wheel when it comes to real estate because this is a big ticket item. When you say you're going to raise coin or you're going to sell coin to raise the funds to purchase a property of 30, 40, $100 million, is not going to happen like this. The banks, the way they do it, they have a warehouse line of credit. That's how they do it. They have a warehouse line of credit. They use it to fund the project, and then they monetize the paper. You see that? It's the same thing that we do. We're looking for investors. We close the transaction. Then we tokenize the property. Now we create the tokens. Now we can go and sell the tokens on the market, just like the banks do. The banks monetize the property or the paperwork, and they create credit. And with the credit, they can fund more projects, you see? And we tokenize it, we create the liquidity. Now we can fund more projects. It's the same thing. The second you go apart from that, you're gonna run into problems because you're gonna have a house of $500,000 and you have 100 people that has a stake on the property. You see that? Because I bought for $1,000, you bought for $10,000, the other guy bought for $15,000. So we all have a stake on the property versus more the real estate market. You cannot do it like that. Now on a building, it may work, but when it comes to, in general, when you try to do a real estate project, you have to, and the owner of the property has to own the property. which means you have to use that line of credit that you have, you settle the account, you create the tokens, and then you sell it on the market. You see, that will be clear, a clear transaction. Nobody has any problems. You see, we have clean hands. Even the government, any agency will not have any problem with us. So that's why we do not reinvent the wheel. We do exactly what the banks do. It's just that we do it in blockchain on the smart contract. That's the only difference. And then when we register the property, it's registered at the county or the courthouse. It's also listed on the blue screen, because once you register property in at the county record, it automatically goes to the blue screen on Bloomberg. See? And now we can take it to blockchain and we seal the deal. You see that? So we do not reinvent the wheel. We do exactly what the banks do, because the banks, when they register the property at the county recorders or the courthouse, they do the same thing. The property automatically goes to the blue screen. You see? And then they go and monetize it. But we say we tokenize it. That's the only difference.
Yeah, no, I wanted to appreciate everybody's time. If you guys would like to add anything else to this video, we covered some pretty good content, I think, about overall the future of crypto, security tokens, utility tokens, you know, what real estate looks like, where we're going, what we've done. I think it's been a pretty good conversation, and I wanted to thank everybody for your time. Jason, I'll put your information down here at the bottom here so people can follow you and see what you guys are up to over there in North Equities. And then Sid, would you like to give any closing statement?
Well, I thank Jason for coming with us here this morning, afternoon, I can say, because I know it's around 2 o'clock, 2:30 up there in Canada right now. And I appreciate you, Matthew, for doing this interview here this morning, because we're in Southern California, or we're in California, so we are the same time, which is great. And we actually, this is a good channel that we have to educate the people of what we do, because more information we give to the people is better off we are, because it makes it a lot easier for us to navigate to the plan that the company has as far as going forward. Again, I thank you for that.
Yeah, thank you. Jason, anything else you'd like to tell the people?
Oh, I mean, look, we could talk about crypto forever. Again, you know, thanks to you guys. I think there's some big game changers coming, you know, for crypto. You know, I'm excited just to see when governments have their own, you know, digital dollar. I think that'll be game changing. But look, until then, you guys are doing great. You know, congratulations making it as far as you guys have. And, you know, looking forward to seeing what comes next.
Awesome. Thanks, you guys. Have a good day.
You too. Thanks.